Hey, this is Jack from Alpha Charts with a state of the market video. Today is April 22nd, 2023. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Also, I can't forget to tell you, find me on Twitter at Alpha Charts 365. Okay, let's get going with these charts. S&P 500, again, VWAP from the peak, VWAP from the most recent current low, and price is still above it. And that is for sure positive, as well as price is still above all of its moving averages. Just barely, but it's there. Now, that's well and good. And the 200-day is rising, kind of right with this VWAP, right? They kind of overlaid each other a little bit. But here's the thing that concerns me. We were not able to take out this high. Stocks are starting to retreat. Now, again, we don't know if this retreat will be all the way down or if it's just like a little higher low and then it takes out the high. But we haven't taken out this high yet. And until that happens, I think in general, it's hard to get too bullish on the general market until this happens. It just hasn't happened yet. And it's going to happen at some point, and we don't know if it's going to be soon or if it's going to be later, right? But it hasn't done it yet. And I think there's a concern here about that. That it just can't do it, and we're starting to see maybe some selling pressure in here as well. All right, so that is a concern. Looking at the RSP, let's look into weekly. Let's see what we did in the week. Weekly, flat. But if you look at the candle, indecision, right? Bulls and bears, a lot of indecision in this candle on higher volume. Maybe a subtle sign of distribution. You see the wicks here, just like you saw the wicks here, and then you saw a pullback. That is, again, that's part of my concern that we may be overdone a little bit. So about even there. RSP, which is equal weighted, was green, but about even, 0.19 is about even. Again, you're seeing the wicks on the equal weighted as well. Again, you saw the wicks up here on selling. You saw these wicks, right? So don't like to see these top wicks over here. Again, doesn't mean it has to go down, right? You saw wicks over here too, and then it rose some. So, but again, the sideways movement, a lot of selling pressure that it has to overcome. Looking at the ratio that I've been watching for part of my breadth studies, right, is this equal weighted versus the cap weighted S&P, RSP versus SPX. And we said we want to see this start to rise, right? Rising means that breadth is expanding versus the cap weighted. And I think that's a positive sign. We're still not seeing that. So again, that is something that is concerning to me that we're not seeing it. Now we could see it next week, right? We take, this 0.0352-ish area out and it starts to really rise higher. And the numbers don't matter really, but it's about, taking out this spot and moving higher, right? The direction. We're not seeing a directional move as of yet. If anything, we made a lower low right there. So this ratio chart, again, is a little bit concerning that we can't push higher. And I think part of it also means that, institutions are most likely not involved in this market, at least not yet. And that's also something that's concerning, that we're not seeing this institutional involvement. Moving to the Qs. Again, VWAP from top, VWAP from the bottom. And I'm selling the weekly, so let's change the daily. And what are we seeing? Flat movement right here, right at that VWAP. And I'm going to expand into here. And I'll be honest with you, this is, for me, this looks more like a distribution type of pattern than accumulation. This does not scream institutional support of the market to me on the Qs. So yes, price is still above the VWAP, right below the 9-day, right above the 23-day. Again, sideways movement. So you'd kind of expect that. Now we're kind of chopped between the two. And then, so this area is getting support at this 312-ish area, 313, but can't move higher. So to me, this looks more like distribution than accumulation, a caution sign, right? Not a sell everything sign, but a caution sign to tighten up stops and watch your risk. By the way, I want to go back to RSP, SPX because I was on the weekly chart and I just want to see what it looks like on the daily. And you can see on the daily without taking everything off again, literally no oomph higher, right? No oomph higher at all. And I think that's kind of concerning, right? We want to see breadth really taking off after especially a big push lower, a bottoming action, maybe some large green candles, something like that. Again, I don't really care about the volume, to be honest with you, but no oomph higher, and that's a problem. All right, so keep going. Equal weighted Qs. Oh, actually, let's do Qs on the weekly. Weekly down 0.62. Again, just every time sellers showing up at this 321-ish area, right? 321.50. Seller. We'll see. Maybe it overcomes it, but it hasn't yet. Equal weighted Qs on the weekly down 0.31. So, maybe slightly better, but not by much. And equal weighted Qs still can't get over this $74 area. I think that's a big deal, right? If the equal weighted Qs get over 74, I think things are good again. 100%, no questions asked. Right now, they are just, getting rejected on there and maybe even turning over a little bit, right? So neither one of the NASDAQ ETFs are really showing any kind of strength right now. Not showing a ton of weakness, even though it does look like, again, sneaky distribution. IWM. So moving on to the IWM, this may or may not be a bear flag. And again, bear flag is just, I hate even using that pattern, but it just shows a weakness in the chart, really. Technically people could have said this was a potential bear flag, right? Down and then a little flag, and then it popped higher, right? And people could have said this was a bear flag and it moves higher. So it doesn't mean that this is a bear flag, but we are under the 200-day moving average. 50-day just crossed the 200, and we can't seem to get above we'll call it 180, right? So all of that, 179, 180, all that is working against it. If this does move lower, right, which it could, I think at least a retest of 164 is in order, and if not lower, right? 164 is the big spot here. So we'll see if it does break lower. Now, if it breaks higher, to the upside, 81, right? Price gets above 81, everything's fine. And so that is kind of the levels I'm watching on IWM right now. It looks like it's maybe trying to turn over. Again, a lot of distribution. I don't see any institutional support in here at all. And that says a lot, right? That says a lot right there. All right, at mid caps, my favorite chart. What happened to you? Again, it's funny. IWM was the same way. Let me go back to IWM. Look at this type of pattern in here, right? It's this day, then a bullish, bearish outside day, then inside day, bearish outside day, inside day, almost bearish outside day, right? And this was tried to move lower, and then the bulls did come back in, and then it did move lower. Bulls came back in, but this type of marking time again on higher volume when it went down, lower volume when it went up. Again, that screams of potential distribution. Mid caps look exactly the same, right? For the most part, bearish outside. That was not quite an inside. Then another bearish outside, inside, almost a bearish outside, almost another inside. This one was inside this bar. So, you see, just to me, this looks like distribution, especially when you couple with what the volume's doing. Looks like distribution. So again, we have to be careful if the indexes are distributing, which we don't know for sure if they are, but that's what it looks like to me. All right, so let's look at the ETFs then. So it's for me on the indexes, neutral to trouble brewing. XLF, again, has that bear flaggish look to it, has not broken down at all yet, right? But to me, this is kind of like a rising wedge, a break of that rising wedge, bear flag, whatever you want to call it. And I think we're going to retest $30 at least. $30 is a big time level, right? Again, 2007 highs, 2018 highs, 2020 highs, support here in 2022 and 2023. If we retest it again, 30 has to hold on XLF, right? So watch out for potential break of this rising wedge in XLF. Again, not a very good looking pattern. And you just did have the 50-day cross to 200-day this week. Again, a very kind of bearish look to this. Going back 200 days too, I'm always interested to see where things will fall off. So we are coming off of this area on most charts, even the index charts. It looks very similar to this. So over the next couple of weeks, as we work off this data and move up this side, you're going to start to see the 200-day start to turn down as well, especially if price continues lower. All right, so it's just something to be aware of. So XLF, concerning pattern here. Hasn't confirmed yet, but if this does break lower and we're close to one way or the other on this pattern, that could be trouble. Let's look at semiconductors, XSD, the equal weighted. Again, this was, to me, more distributive type look to the pattern. Price now is below all of its moving averages, holding on this 190-ish support area. And again, 200-day is rising, but to me, this looks more like a distribution, and watch out if this breaks, right? And, we're right on the precipice. If this breaks, we're in big trouble. Market's in big trouble. If it bounces, everything's fine. But that does not look good to me at all. We are, getting the polarity right here. Does not look like accumulation. Looking at SMH, so I like to look at both of them sometimes. Again, similar enough looking pattern, right on the precipice. Again, it's cap weighted, below all its moving averages, except for the 200-day, which is turning up. Maybe a false breakout showing up on SMH, stock split coming up, ETF split, I guess. But again, does not look like accumulation. This looks more like distribution, in my opinion. Transports, kind of like 50-day declining. All these are kind of like chopping around here. Again, maybe bear flag as you make that kind of same rising wedge argument on transports, right? Something like that. So again, a breakdown here would be a problem. 50-day overhead could be the impetus for that. So just be careful right there, right? Transports aren't really confirming anything, even though they are above the 200-day and some of the moving averages. Not a great looking chart, in my opinion. And maybe I'm getting a little biased now as I'm looking through charts too. Home builders. Well, there's a bright spot. They kind of broke out this week, and we'll see if they can continue higher or not above all their moving averages, right? If they roll over, that would definitely be bearish. Right now, they haven't. So home builders, which is really how a proxy for employment, doing well, right? So each one of these indexes are proxies. Financials, obviously for financial markets, semiconductors because they're in everything, transports because we obviously have to transport goods and services and tells you a lot about the economy, and then home builders for employment as well as manufacturing. Again, and they all kind of interrelated as well. So it's my proxy for the economy. And again, there's question marks on their financials, semiconductors, transports. The home builders are the only one that are kind of holding up as we're speaking. But again, does not look like institutional support. Like this looked way better, right? That you say, okay, institutions might be coming back in the market. This says, I don't know about that. So question marks on the ETFs. Let's look at the internals. Starting with the VIX. VIX is depressed. And when it gets depressed, again, it got below 16.5. We're right near that 16.5 level, which is an arbitrary level. It's low, it's staying low. But from compression will come expansion. And expansion meaning volatility. And if we get that volatility back in the market, things can go move very quickly. And this is a rubber band getting pulled, right? Rubber band getting pulled, getting pulled. Eventually, it's going to snap. And the further it gets pulled, the more aggressive that snap is going to be, the more violent that snap is going to be. So we are getting pulled really tight on the VIX, and it's staying, and the tension is mounting. Watch out. What else do we have here? Credit spreads. You know, historically, I'll go to weekly on this. Historically, we get an advance, a consolidation, then the big advance. An advance, consolidation, big advance. Advance, consolidation, big advance. Advance, consolidation, big advance. I don't know, maybe this is the capitulation people have been talking about for a year now, right? Maybe that's coming, maybe not. But the big advance, if history is our guide, which is that's all we have, right? We can't see the future, so we can only go back and look at history. If history is our guide, then big advance may be on the horizon. Again, do we know if it's this week, this month, or even this year? We don't know. But big advance, question mark. This credit issue that may be or may not be brewing again, and some don't go straight up like this. Some last from June 15th to February 16th. That's 6-7 months of almost 8 months of advance. Again, but some do go very quickly. When they start to advance, September to December, right? Much faster. So we don't know what's going to happen, but we do know with the VIX pulled, this has not had its big advance, which history says it needs or has happened every time we go through this type of pattern. Again, something could be brewing. That's all I'm gonna say. We don't know the future, obviously. But call ratio, we have, basically bulls and bears playing tug of war for the most part. We got extreme back here in March. And that was actually a good time to be in the market. And now we have this just choppy mess in the middle, no signal, right? Sentiment in the middle is no signal. And then let's look at breadth, MMFI. Again, no improvement, no deterioration either, because we've had a sideways market for the most part. So on the percent stocks above the 50-day, because it's been sideways, the market, if it was above the 50-day, it probably stayed above the 50-day, right? Because the market moved sideways. But no advance in breadth at all. And I would say we're seeing distribution on the tape. So just be careful with that. What else we got going on here? And I was in earnings next week, right? So earnings is a big deal, right? We have, I'm going to the NASDAQ real fast on my other screen over here. If I can get to it very fast. I don't know if I can. Yeah, it's not showing me. It doesn't matter. Next week, Microsoft, Amazon, Google, all of these companies are having earnings coming up, and it's a big deal, right? Those are market moving. I think it was Tuesday. It is, yeah. Again, don't worry about that. Johnson Johnson. I'm 99% sure. This week you have Microsoft, you have Amazon, you have Google, you have probably Meta is in that group. Earnings Whisperer on Twitter. They're the ones to go. I'll post a chart later with this. Anyway, point is, big time earnings weeks, especially on the tech sector. So be very, very careful. And we can look at gold real fast. Gold retreated as well, right? So is gold a safe haven? You really can't say it is. It's just another risk asset, period, on the story, right? Bitcoin, let's just finish this up. Bitcoin via Coinbase. And it retreated from its $30,000 level. It looks like it may want to retest this 25,000. So again, risk on, risk off. Bitcoin is more risk off than risk on. All right, let's wrap it up. Indexes, really haven't advanced and haven't taken out the areas they need to. The ETFs, most of them are showing potential trouble, and then internals are showing a lot of tension on the market. What does that add up to? I think a neutral posture at best, and if we start to break down, even potentially a bearish posture. That's it. That's my assessment, my opinion of this market. Hope you all are doing good. Stay safe out there. Leave me a comment below. Let me know how you see it, right? I'd love to hear from you, everybody. We'll talk to you later. Bye.